Okay, hi everyone, and welcome to today's webinar. My name's Sam Jacobs from 6 Degrees Investor Relations, and I'll be hosting this presentation from Kalina Power Managing Director Ross McLaughlin, alongside Executive Directors Matthew Jenkins and Tim Horgan. Today's presentation will provide an update on the development strategy for Kalina's portfolio of power plants to power data centres in Alberta, Canada, which is fast emerging as one of the fastest growing data centre jurisdictions globally. After the presentation, we'll commence a Q&A, and that'll comprise both written submissions and a live questions segment. And then a copy of this webinar will be available on Kalina's media channels later today. And you can download copies of the company's latest announcements from the ASX platform. But for now, I'll hand it over to Ross and the team to kick things off. Ross, over to you.
Thank you very much, Alex. Great to be with everybody. And Tim, I think you're going to start us off.
Correct. Sam, if you could move to slide 3, please. So here we have a nice quote from Blackstone setting out the enormity of the AI and digital power infrastructure explosion and just how central to that demand the need for power is. Blackstone estimates that there's $1 trillion worth of investment going into this space over the next 5 years. And Alberta, whilst at an earlier stage of that AI development, is certainly seeing very real activity and demand with over 20 gigawatts of applications, primarily from data centres for load demand. Kalina is ideally positioned with 1.7 gigawatts of potential projects to meet that demand for power. Could you go to slide 4, please? The biggest change to this slide, since we spoke about it in February, is of course the $20 million receivable that we just announced to the market. We are very confident of the near-term receipt of these funds, virtually imminently, and we'll be advising the market as soon as they come in. Clearly, these funds are utterly transformative of our cash position and balance sheet. They change us from a company under pressure to make a deal to one that can confidently pursue the range of transactions, investments, and sales that will allow us to develop these projects in our portfolio in the way most accretive to all of our shareholders. Ross and Matt will be setting out in much more detail here how we intend to do that. Over to you, Ross and Matt.
Thanks, Tim. And it's great to be able to talk to our shareholders today and new investors as well coming in to look at this story for the first time about just how transformative this recent weeks have been for our company. It's really quite exciting for all of us right now. And as Tim was mentioning, it really does put us in a really strong position with respect to the negotiations we're having across all fronts with all the transactions that we're looking at today. So if we go to our next slide here, please, which is KPO's focus on AI data center activity. And you can understand why when you look at this surge in demand for power of AI data centers in Alberta specifically. We're going to get into the details as to why that's so important, how that's unfolding. Perhaps most importantly for our shareholders to understand how we have positioned our company to be really at the leading edge of this whole exercise. We have been really looked after very well by the AESO with respect to an allocation of megawatts. And we have been very well received by all of the transaction partners associated with this transaction, which we've recently completed. For those that know the story and for those that are wanting to come to understand the story better, you should understand that we right now have 5 sites under site control. Those projects collectively over time have the capacity to do up to 1.7 gigawatts of power development. That's pretty exciting when you consider the big names and the big volumes of projects that are underway around North America, around the globe, where everyone is looking and talking aspirationally about projects that can be a gigawatt or more. This really positions Kalina in a very, very strong position today with what we have under development in Alberta. And to give you an idea, the cost of each of these projects right now, if we just build them in a 2-on-1 combined cycle power plant configuration, is around $600 million. And these projects are being developed, as we've talked with you folks in the past, where we were looking at absolutely coming out with carbon capture and sequestration. They're being designed to incorporate carbon capture and sequestration at the appropriate time depending on the customer's needs. And we'll describe that in more detail to you in terms of why we could and why we may defer carbon capture and sequestration, or whether we will be installing it at an appropriate time in the future. Now, this recent transaction of coming in with $20 million of non-dilutive transaction funding has really, as we're talking about, been transformational. And we're going to want to have Matt walk us through how we got to that position on that transaction, so you'll all have a better understanding as to what did we give away, which is basically nothing, in return for something which is fantastic, and we've been able to retain our queue of all of our load applications. Now, I would want to also point out to you that this, as I mentioned, is unfolding the way the government of Alberta and the AESO in Alberta had asked everyone to do it. They had said, if you're going to come to Alberta as a data center and you want to basically be here, don't rely on the grid to provide all your power. Partner with a project developer, a power developer, or bring your own power indeed. And that's exactly what we did when we started doing our projects and our applications. And we'll show you that in more detail later through this presentation. We are continuing with an approach that takes us with projects that initially will be done under 200 megawatts. We're going to discuss that in more detail as to why that size is so critical in terms of being able to deploy quickly. Because one of the requirements that all of the AI data centers are looking at is how quickly can you get power in the ground and be able to build a data center that can have that power. And so this is becoming a strategy that we came up with a few years ago, as you will all recall, of being under 200 megawatts. This is turning out to be exactly the right strategy for exactly the right time. And we have commercial agreements which are underway. And we'll talk more detail around where we're at with Crusoe on our framework agreement and how that is advancing and where we're at. And we'll go through that in this presentation today as well. I want to stress this if I can. You should be all aware that the framework agreement that we have with Crusoe is a framework agreement. We're looking to get definitive agreements done with Crusoe, and that's what we'll talk about through this presentation. But it's also important that everyone understands that part of that framework agreement provides Kalina with negotiating rights to negotiate with other data centers as well, and that's what we've been doing, and we have been in discussions with over 3 or 4 very meaningful discussions with other data centers over the last year. So that's very important for everyone to be aware of. At this point, I'd like to turn the presentation over to Matt. Matt, if you could pick up on this right here. Thank you.
Sure thing. Thanks a lot, Ross. And just to reiterate a few points on Alberta here, as well as intermix a few updates as well. But to remember that Alberta is a deregulated energy-only power markets, the only one in Canada actually, and that's one of the reasons why it's been so sought after for data center development. Any participant can come into the market and apply for load there. Not unlike many of the other grids across North America, though. While we are a 12.5 gigawatt peak load market, we currently have requests totaling 20.7 gigawatts of power of load only by 2030. There's currently less than 5 gigawatts of new generation planned, including some of our own. And there's a major capacity gap happening here. The largest issue in the province currently is not the demand side, but actually the supply of that electrical capacity. We reiterate what the Premier said even a year and a half ago, just to say, bring your own electricity or partner with an existing company. It's the only way that this grid is able to maintain its affordability and reliability. And we're watching this play out in real time. All of Kalina's strategy all along has been to be co-sited with these plants. And now we're just starting to see the advent of how this competition can happen for our megawatts. Also, just to reiterate on the natural gas cost advantage, why AI hyperscalers, particularly those seeking the gas fire on this, or gas-fired power, Alberta has a structural $1.50 MMBTU that can fluctuate, but that the actual disconnect or the differential between our market and the market in the United States is structural. There's just not enough egress. There's extreme push by both industry as well as by our governors to actually have more domestic demand load or more domestic demand, so we're actually able to use this supply. Little known fact, we just updated within the province the proven reserves. And when combined with the province neighboring and pipeline connected to us, British Columbia, we actually have 35% more proven natural gas reserves than Texas. Our production's much lower. There's lots of available gas here. Another key feature is obviously the cold climates. And we highlight once again that situating the plants here makes a lot of sense for the hyperscalers that have 20 to 40% lower cooling degree days here than they do down in the southern US. Go to the next slide, please. As we talk about all of these megawatts coming into the markets, all the load that's been there, a year ago, that load was somewhere around 6 gigawatts. In the springtime, it was about 16 and a half gigawatts. At that point in time, that's when the system operator had to come up with a solution, which is where we entered in and had some of our megawatts included in a load limit allocation process. A lot of these megawatts that have come in are from a number of hyperscalers, data center developers, etc. Everybody has been looking around the table, wondering who's going to pull the trigger first. And as of a couple of weeks ago, we finally found that. There was a major hyperscaler announcement that came through the partnership of Kineticor and Pembina. Kineticor is a team that I've worked with extensively in my past career at the Cascade Power Plant. They were able to amalgamate a total of 907 megawatts out of the 1,200 for the sole purpose of electrifying a major hyperscaler to come to Alberta. We believe that this is the first step and really the advent of the data center industry in Alberta, as we have not seen any announcement in Canada of this scale. This is a major project, and this will be backfilled eventually through capacity development through that partnership of Kineticor and Pembina. However, there remains a significant load demand in the province. Kalina's plan has always been to co-site. We've maintained the exact same sites we'll go through as we had last year. Our strategy really hasn't changed, but now the market's finally, we believe, going to move to us as this demand has just supremely outstripped any sort of supply in the power market that can be delivered in this province.
Hey, Matt, could you just speak a little bit about how that transaction went down and how we were able to retain our load?
Certainly, yeah. Again, at the time, there was 16 and a half gigawatts of load demand in the province. The Alberta Electrical System Operator distilled that down to 4,800 megawatts, which they deemed to be advanced projects, of which Kalina had 840 megawatts applied for in the queue. As they further prorated that down to the 1,200 megawatts which would be available, we were allocated the 180. As this progressed, we were given an option, I guess, to one, keep these at our own sites, or two, transfer them to somebody else who was within the province or within the process that was able to use them at another site. We believed it was really important to attract a major hyperscaler there, which is why we made the critical strategic decision to actually transfer those megawatts. What ultimately will happen of this? This was only the rights to electrify load in 2027 and 2028. What's going to structurally happen for our applications is they're going to remain in the queue. And by 29 and 30, when initially our plans at Kalina do have plans to be online, we'll also be receiving back that load. And we'll be able to augment that through the period. But at the end of the day, that 180 megawatts wasn't going to be of use to us. It may have been too small for a major party such as did come into the province. And we're now going to be able to maintain, and we hope keep that 840 application as we also build generation alongside it for the exact same time period. Go to the next slide. Within these 5 strategic sites, again, to remind existing investors as well as new investors in the story, these are the same sites that we've had for about a year now. Some of these have been expanded at request of some of our potential data center partners, including Crusoe, and they can all accommodate significant both generation and load applications as we move forward into the 29 and 30 period. Again, if everyone remembers the key importance of where to site these facilities, Each one is near a natural gas supply. Each one's near significant electrical transmission capability as well on some of the high voltage lines within Alberta, the highest high voltage lines in Alberta. And also these were selected being co-sited near carbon sequestration aquifers. But really nothing's changed in terms of these things. The key importance of where we've cited these, especially between Calgary and Edmonton, the two most populous centers in the province, is that it also happens to be adjacent major fiber lines, major pipeline networks, and has a ton of industrial activity as well as an adequate labor force to actually serve these ultimate construction projects. And as we go through this presentation, we've actually mapped out that subsequent, a lot of this 20.7 gigawatts is sited very near, if not overlapping, the catchments of where these sites were located and selected even over 2 years ago. So once again, just to say that our strategy now continues to be almost the same. Just the market is now moving directly towards us and also just adding value to these sites.
If I could just add maybe, Matt, that the two of our projects there did not involve an application for generation and load. It was generation only. At that time, we were thinking that this would be ideal to keep a couple of these projects aligned just for potential gas tollers. But with the way the industry is unfolding here, we will be taking a look at Gilby and also our Claremont project, which have generation applications in right now. And we will be looking to add load as well. What we're going to find increasingly that the AESO is looking at saying, hey, if anybody wants load, they can have it, but they're going to have either a 1-for-1, perhaps even slightly more generation on site to basically provide the AESO with the comfort that the load applications are not going to put a stress or a demand on the grid that they cannot meet. And that's really what's driving this whole process for us. So the idea of having Kalina sites co-located with data centers, they've actually told much of the industry that's the way you have to do it. Do it the way the Kalina has done it thus far. So two of those other projects likely will end up with load as well in the very near future. We go to the next slide, please.
I think here's the map just on the right side here. The sort of the lighter blue circles denote where the data center projects have actually listed in the interconnection queue. And you can see that the sites that we have under the Crusoe Framework Agreement are denoted in red there. So you can see there's extremely strong overlap at 2 and also in proximity of the third in the center of the province. Now, if we look to the left side, this is where we detail a bunch of the load applications that have happened. Why we're highlighted at the top there is, again, we were the only party within the province who actually listened when the AESO said, please, if you do have loads ambitions and you do have power ambitions as well, please file these as both load and generation, which is what we've done. So we sort of stand alone in that process. And it's why we think that we were included within the advanced project stage in order to get the allocation of the 15% of the 1,200 megawatts that that the system operator awarded under the load limit allocation process. A number of these projects going forward, again, you can just see the scale and the folks behind them as well. They've done a lot of work on their sites. They've gone through the exact sorts of things that we have in order to identify where there could be potential power, where there is enough transmission. Some have even gone through and said, could we actually build gas and get gas to our sites? But they don't have them today. Some of them do, but certainly not all. This is where, again, we see ourselves, especially in the locations we're situated, as staring a market in the face that just has so much demand, and we have some of the supply, and we're already in the queue existing as being the load and generation that the AESO is actually looking for. Next slide.
I'm trying to remember, Matt, whether you are doing the slide or I'm doing the slide.
I think think you were, Ross, but I'm happy to do it if you'd like.
No, that's fine. I can do the slide. Matt and I have been doing management presentations like probably 2 or 3 a day for the last couple of weeks here with the financing that's underway with PEI. So we're pretty comfortable doing these presentations together. Many of you who've looked at this before would have seen what it's going to look like with a data center that's owned and operated by a data center company. That's going to be co-sited with a power plant that utilizes carbon capture and sequestration. The difference is that we're saying today, as I mentioned in my comments earlier, is that the post-combustion carbon capture unit will come online when the customer wants to have it, or when the economics for how we will be able to be hooked up to the grid can be done in such a way that we are compliant with the clean electricity regulations. And there's a lot of complications in answering that question at this particular point in time. But what is very clear is that data centers want to get to market as rapidly as they can. So it's quite possible that we'll build a combined cycle power plant to be able to facilitate that much more quickly than building a comprehensive package that also involves the post-combustion carbon capture unit. In fact, we may even go to market very quickly without adding the bottoming cycle of a combined cycle plant. We might just go with simple cycle gas turbines just to get them in the ground to provide power for the customer. That is what we're negotiating with different customers right now to find out what they need. But the bottom line is the data center will own and operate its plant, and it will get its power from us, but they'll also have a grid connection for backup power from the grid. We can go to our next slide, please. I'd like Matt to talk about this in particular because it involves the long-term offtake agreements, and Matt's experience with the Cascade project was instrumental in getting that project over the finish line. And so, Matt, with that context, maybe speak to what we're doing here and how it's a little bit different, but why you see it being so important.
Sure. I think just regarding that project, which is a 900 megawatt project that was commissioned last year in the province of Alberta, but reached close several years before that. But part of the contracting there, again, Alberta's an energy-only market. There were no PPAs available, et cetera, to be able to build in that market. Yet we were able to reach financial close of the project financing due to the strength of the contracting. It was a complicated supply story on how we actually got that done. What we've resolved to do here is be much, much more simple. And that's just to say that we're going to basically have a tolling agreement whereby we will flow through, we'll take natural gas, we'll turn it into electricity, sell through to a data center with a very long-term offtake. The actual Kalina will not be exposed to the commodity pricing. We'll certainly help to work and to mitigate that with a number of our connections on both gas supply and potential hedging arrangements to ensure that long-term contract remains economic. But really, this will be much more simple. It'll be a midstream model whereby we're basically just charging a cost and an economic return for our investors just at the plant level. A number of benefits in that structure are we think that we'll actually be able to get a higher gearing or a higher leverage ratio in the project financing. And that's just due to the fact that we will have more of a stable price in terms of an actual PPA, as opposed to relying on the strength of the upstream supply contracting. And we also believe that in this instance, that off-taker will be creditworthy. We'll be able to read through some of the data centers and go into and touch some of the hyperscaler credit, which should ensure that contract becomes very, very strong. The operating costs, the emissions liability, et cetera, will be passed through to the exposure, and that'll be reflected in some of the variable expenses that'll be within that in this offtake type contract.
Now, I think it's important we spend a little bit of time making sure everyone can understand what KPO's commercial interest is going to be in this endeavor and some of the funding strategies which are underway to get there. Everyone will appreciate that some of the most difficult funding exercises are all about funding during pre-feed and feed. And Frankly, as long as you contract your project properly along the lines that Matt was describing earlier, and you're dealing with the right counterparties with respect to major equipment and engineering, if you have all that together, you're in great shape when it comes to arranging project financing at FID going forward, so debt and equity for the projects. So the secret is to make sure that you have an investment strategy that is accretive through the process. And that's why we've been engaging with the New York Investment Bank, PEI Global Partners, along with Western Canadian Bank, Moneta Securities. They're very actively engaged in the process. We'll speak a little bit about that later on. But I should tell you that they are very excited about coming in, as they have already funded other similar type of projects in the United States, to fund and have the investors that can bring in funders to fund pre-feed and feed all the way up to construction. They're very anxious and keen to get involved in the funding of the project debt and equity, but we've given them no real assurances on that, other than the fact that we will treat them fairly to the extent that they are successful in funding us through this pre-feed and feed exercise. So they're in the process of doing that right now. And we expect that there will be some complementary funding that might come our way, depending on how we structure the deal, which might come from some EPC partners and also some major equipment vendors, and also possibly even some government funding along the way. But all of that taken together will be done and handled in the most accretive way. So what we like to say, and we say in many of our presentations that we're giving right now, the number of projects that we do and the pace of which we do the deployment of them is entirely dependent upon making sure that we can access funding, but do it in an accretive way. So our job's not to go out there and get all 5 of these projects over the finish line. Our job is to get as many of the projects over the finish line in the most accretive way possible for our KPO shareholders. So let's make sure we understand that this funding is happening at the KDP level. And we're going to show you in the next slide or two exactly what some of the options are when we say that. But KPO's commercial interest is that KPO has to understand that KDP is going to earn a development fee on each project, roughly speaking, of around 5%. And it's also going to get about a 10% free carried equity interest on each project. And it will be in a position where it's going to be doing the management of the plant operations and receiving fees for that, et cetera, taking an equity stake in these projects through the fundraising exercise that PEI is going through right now. And KPO, which owns currently today 100% of KDP, is going to receive its pro rata interest in the profits and distributions of KDP, as long as we can do an effective job in terms of making sure those projects are structured in the right way that is accretive to KPO shareholders. Not KDP shareholders. The only shareholder of KDP right now is KPO. We've talked a little bit about the commercial offtake strategy, which was just on the previous slide. But there's going to be a number of things which we can show you in the next slide. I'd like to go to that if we could right now. That'll take us to showing what these different structures are that PEI and Moneta are considering as we speak. So there could be investment that goes directly into KDP, and KDP could be looking at how shareholders that could come into the company to provide the adequate capital that's required to take these projects through, all the way through to FID. Or what we could see, and we are talking to different folks about coming in at the level just below KDP, in other words, not diluting any of the KDP's equity interest, but coming in either with a structure that allows an investor or investors to take a stake in the entire portfolio. And it's also possible that we may find some investors only want to take a stake in 1 or 2 projects. So those are all the options which are being explored that are underway right now. And Matt, maybe this is just a good time to maybe give some of our shareholders a sense of what the pace of play is looking like right now, what you and I are seeing in our engagement with PEI and the pace of play that is underway right now.
Yeah, as you mentioned, we've been on, we're right in the middle of the process right now. In terms of, we're past sort of investor outreach and into the management presentation phase of that. And, there's certainly a range of options which we're hopeful are going to be available to us. I think the biggest thing that having a U.S. advisor is really important in this whole exercise is that the U.S. is definitely more advanced than we have been in Canada. Again, we just really hit the advent of having a major hyperscaler place itself, not just in Canada, but in Alberta as well. And just the types of transactions we're seeing so much of the utility space, the utility asset class, have one of its best years ever on sort of the existing capacity. If you want to draw a corollary there or a parallel there to what's happened here with our load limit allocation process, that's where that existing generation or the excess, any potential supply actually is used up by the hyperscalers first. Then we've already seen some of the new build activity happening in the US. That's where we're sitting now in Alberta, certainly, and where we're sitting with Kalina. As we mentioned before, just the incredible demand that's actually out there for this load. We expect that there are some interesting structures that could be proposed partially through this PEI process and partially through our commercial offtake strategy as well, where we do see such incredible demand and competition for the ability of for people to be electrified, partnered with the power developers such as ourselves, that we could see some interesting structures. We've seen some of these already in the chip space. We see a bunch of circular type deals coming through from the AI companies into chip manufacturing, and certainly the next leg that we're hearing from our advisors, as well as just in the news in the US, is that this is also coming to those who can deliver capacity for the next big wave, the next big build out. So that we think our offering is going to have success on that basis. There will be a lot of competition, and it'll be, it may not just be the most straightforward financing that we've seen in the past building power plants as everybody on the team has. So we're really excited for that.
Maybe we go to the next slide, please. And by the way, some of these slides, just to let you know, have been lifted from our confidential information memorandum, and also from our management presentation deck. Obviously, these slides themselves do not contain a lot of proprietary and confidential information, so we've been pretty selective about what we've chosen to use here and edit it appropriately. But this will give you an idea. The timeline to FID. And this is just an overview of the key milestones that we have to get to. We should let everybody understand that I think our credibility is greatly enhanced when we're talking to financial investors who are looking at this, and they understand that we ourselves have our own gating process that we go through with each of the projects. So the idea is to take each of the projects through and a progressing de-risking of the portfolio with each project, making sure that the major technical, regulatory, and commercial risks are addressed. We need to do this at each stage as we're going through a gated process in order to do that and build ourselves up all the way to FID such that the capital is there and it's available. There are a lot of really critical project rights and regulatory approvals and pieces that are necessary to establish and keep ourselves ahead of other market entrants. And we've proven that to our shareholders now. We've proven that to the market right now, that we have stayed ahead of others coming into the market right now, as we've explained to you earlier in this presentation. And commercially, the kind of contracting that we look at doing, whether it's the supplier agreements, the long-term offtake agreements, and also the infrastructure and interconnection agreements, these are all very, very critical. And if you don't have them done at the right stages and the right timelines, it doesn't necessarily mean a project is dead. What it might mean is that other projects are prioritized above the others. So one of the really exciting things that I believe that we've done here, and this is a take up on the old pristine power days, you don't develop a project only to find you hit a critical and fatal flaw. You're developing multiple projects. And I will tell you that we have other projects that we're looking at adding to our portfolio very selectively, very carefully. And if we think they hit the right criteria, we will add and we will grow our portfolio. But the notion of having 5 projects isn't that necessarily all 5 will get over the finish line. We were hoping that they all will. But the great thing is that we're certain that we'll get several over the finish line by doing that approach. Now, the major deliverables take us with a timeline that talks about completing, once the funding comes through the door, we'll be in a position where we'll be able to complete the pre-feed into next year in the 2026 timeframe. And then we'll start the feed stage, and we'll be able to complete that in such a way that we can basically get a COD date that would be ready for the first project. And then the next 2 remaining projects would follow that in order and sequentially. And these summarize for you some of the major deliverables that are all there. So I won't read them all for you, and this presentation is available, so you'll be able to see copies of this that are on our website. We go to the next slide, please.
I think I just add one thing there, Ross, as well, just on just on that last slide, I guess, as well. As we've talked about, just with the demand, of the data centers, and remember that a lot of the data center developers applied for their own load, have their own sites. They may already be advanced on a few of these other items as well. We need to think very carefully. The point of having all these sites as well is we're so close to some data centers, we're far from others. We want to be able to attract a wide range. Also on the gas supply piece, we're very close to critical gas infrastructure. However, we may wind up with a very significant unregulated solution on the gas supply to actually go on sites. And a lot of these very large producers, very large midstream entities, have significant industrial sites that are already permitted as well, that we've been in discussions on. These are the types of things that could augment this time frame a little bit. And we're pursuing all those, but we would never have gotten into these discussions. We don't get into these C-suites to actually meet with these people on the commercial things had we not actually had the work done over the last 2, 3, 5 years to actually be at this stage, to offer our own portfolio, to be where we are in the queue, and to be advanced in even the megawatt allocation discussion. So I think that's really important here, just as we discuss timelines as well as just overall commerciality for the portfolio. Just on our
summarizes. Yeah.
Sure. Just on the near-term value drivers to recap somewhat here. Again, the engagement of a New York investment bank was really important to the team and to me personally as well. Someone who does have Western Canadian experience, but is also active in the market in the United States, which again has advanced quicker than us. And we're right at the advent. We think that this is the next. And finally, after waiting here, we think that this is going to be the next destination where we do see a lot of this load gets placed. As we consider the sale of one or more projects, we continue to do that to capitalize on this data center demand. This is always a discussion. Should we have pursued the large load limit allocation process, which took basically all of everybody's time back in June, or should we have pursued some of the sales that we were looking at the time? We'll continue to pursue all those things, but only in the best interest of shareholders. Near term as well, contracting the project development agreements with the data center companies, such as Crusoe. It's not exclusive to Crusoe, but we're certainly working with them very closely and in contact with them very frequently. But there's others. There's just so much demand. We've been speaking with others. We're under NDA with many of those others in the queue who didn't get an allocation, this large limit allocation process. And now they're looking to 2930 on how they realize their investments with the initial siting that they've done. Contracting directly with those data center companies, project developers to co-locate plants on their sites. If they're not going to come to ours, we're agnostic if we go to theirs. And some of these, as you saw in that one map, we're extremely close. We're within kilometers of some of these sites that don't have the potential or don't have the 2 to 3 years of background for developing this for power, which they will need going forward. So we're going to be looking at those as well. These are very near-term, realistic goals for us to have. And again, finding additional sites that may be at a gigawatt scale. Now that we do have someone here who will be looking to build at a gigawatt scale, we think that it's very prudent for us to look at our own sites and how we expand those so we can accommodate those or look at potentially other jurisdictions. And lastly, the securing of the natural gas, either on a regulated with the NGTL system here, and or on the direct supply contracts, which would be an unregulated approach, as I mentioned, with some of the large natural gas producers or midstreamers or other industrial sources of gas where we can actually have this. We believe we'll have a competitive bidding process going through in the next few months, and we'll be able to realize. So I think these are all things that shareholders should be watching for in the near term for value.
And Alex, that wraps up our presentation, and I'm sure we have some questions we should go through.
Yeah, thanks very much to the team. Perhaps on the Q&A side, just to kick off, we've had a few questions come in around the capital markets side. So, given the enthusiasm around data centers and the demand for power that you've just outlined, is the company exploring the merits of a public listing in North American capital markets, potentially US or Canada, to align with that market sentiment and potentially, access deeper pools of capital?
With all the activity that's going on, especially that one company that everyone's talking about right now, Fermi, look, this is very topical and it's very timely. But right now, we're entirely focused on the efforts that were underway with PEI and Moneta. That is our entire focus right now. We can see what the future holds, but right now, this is where the rubber meets the road and where we have something that we can deliver very quickly and be capitalized properly in the most efficient and I believe most accretive fashion possible. That doesn't rule out plans for the future, but that's where we are today. We're entirely focused on what we're doing right now with the PEI process.
Yeah, that's noted. Thanks, Ross. And I think you mentioned how many, meetings you and Matt in particular have been holding with investors, but just another question's come through just around investor roadshows. Is the company planning kind of additional investment roadshows in the near future, either with Australian investors or North America, US and Canada?
Our focus right now, honestly, is in North America at this particular point in time. I will tell you, one of the big surprises, maybe it's not a surprise to many of your listeners, but the old days of pounding the pavement in New York, which I've done and Matt's done, and all of us have been doing for years, is not the way this is happening right now. These investors are from diverse areas of North America, some in Canada, some in the United States, some in Europe, some from Asia, and we're even talking to somebody in Australia. So PEI's got us very, very busy doing virtual meetings with very sophisticated investors. And so we're not really seeing a roadshow in that context. We're just basically responding right now to all of the marketing efforts that they have underway. In terms of talking to and reaching out to investors that are in Australia, we will want to basically come out and talk to investors in Australia about what we're doing once we've got ourselves through this process. Getting ourselves through this process and delivering for our shareholders is where we're focused right now. And when we've done that, absolutely, we want to be able to communicate that. And we're certainly working through our investor relations firm with regards to how to communicate with our investors.
Yeah, well noted. Thanks, Ross. Perhaps turning to a market comparative, because a few attendees have pointed out a recent listing on the NASDAQ for a power supply company, specifically in connection with the data center boom. That's Fermi, Fermi. Listed on the NASDAQ about 3 weeks ago and now has a valuation of around about that's Australian, 25 billion. So, it's probably natural to just discuss at a high level whether you see some comparatives there in terms of the type of power they're trying to bring to market, how they're trying to do it, and the growth of this broader data center industry.
Yeah, I'd like to have Matt speak to that a little bit, but I will tell you one thing. The guys at PEI are really delighted with seeing that right now, because when you get right down to it, that's a real tailwind for us, right? Absolutely. I'm not commenting on the valuation metrics, and I'm not commenting on anything positively or negatively about that company. But all the attention that it's getting is certainly a tailwind for and helpful for the efforts that are underway with PEI. But Matt, do you have a comment on that?
Yeah, I'd say that too. I mean, the businesses may look similar. There's many things happening in the U.S. The U.S. investor base, is rabid for these sorts of things as well. I don't think there's no comparable to this anywhere sort of with any projects cited in Canada. That's not to say that we don't have opportunities to do that. And in fact, I spoke with their principal because we were both panelists at a conference recently here in Alberta, and that'd be the former governor and secretary of energy, Rick Perry. So I'm very familiar with the story and what he's done there. So I'd say we're watching it closely for sure.
Yeah, thanks, Matt. Perhaps turning now to more of the project delivery side. There's obviously a few technical questions that we'll start on. One attendee has referenced, I think it's Mitsubishi Heavy Industries. They recently brought a post-combustion CO2 carbon capture and storage plant online. Is there any indication in the market, to your knowledge, what sort of unit costs and capital costs they've quoted for that project?
Well, we can tell you that we have been in discussions with MHI for the last 4 years now, and they have participated in a couple of our requests for budgetary proposals, etc. And we have a rough idea as to what their capital costs would look like, but after you look at a gross cost, but more importantly, looking at what the net cost for one of our projects, let's say to tap it on with a 200 megawatt combined cycle power plant, if we added the post-combustion carbon capture unit from Mitsubishi, we're talking probably in the range, after all the incentives, of somewhere around, say, $300 to $320 million, something like that.
Nice one. Yeah, that's interesting. And another attendee just referenced, I think it's the TIER system, TIER. That's Alberta's Technology and Innovations Reduction Program. So just in connection with the costs associated with that, do you think it's possible that post combined cycle gas turbine carbon capture and storage costs can match those current tier pricings around about $95 per tonne?
Yep, it's a complicated question and with a complicated answer, but let's put it this way. We do know that we've been able to look at both the federal carbon tax. We've also been able to look at the tier carbon tax costs. And if we average it all out and look at all things being equal, we believe that the number is pretty close to that $95 that you're referring to. Actually, but closer. Actually, when you depreciate it over the 30 years of the lifespan of one of those projects, I think it comes down to a number just under $90 per ton.
Okay, noted. Thanks, Ross. Another question just on pre-FEED work. So I think we've touched on your development timeline in that presentation a bit, but this attendee's just asked, is the company now in a position to press on with that pre-FEED work with reference to approximate timeframes by sort of have 5 sites complete by Q2 2026?
We have to be careful with that answer because, Sam, the reality is this, right? This has changed markedly our balance sheet. But changing our balance sheet doesn't mean that we should be going out there and just cavalierly spending money very aggressively. We should be taking measure of how we do with the fundraising efforts or even the possibility of sale of one or more of our assets, right? But right now, let's just focus on the fact that we have money in the bank, a sizable amount of money in the bank, and we also have a process underway with PEI. The reality is that we are in a position to position ourselves very carefully in advancing some of the issues on pre-FEED across a number of our projects. And we are doing that as we speak right now. Okay, we're being very careful with how we spend our money and we're advancing that. And this does allow us to absolutely move forward aggressively, but very carefully. But I will tell you that it would be foolish of us to move across the board entirely with all 5 of our projects through pre-FEED and then find ourselves running out of money because we misjudged the timing of the rest of the cash that is necessary to come through with this process. So our board's going to look very carefully at a budget that we are preparing internally that will basically take us through a stage-gated process And a lot of it's going to be fundamental to what I said to you earlier. The number of the projects that we do and the pace at which we deploy them through all the processes is going to be a function of how much money we're successfully raising in an accretive fashion.
Excellent. Thank you for that answer, Ross. Just another one from the floor. This one may be better aligned with Matt. It's sort of in connection with, I think it was slide 8, where Matt was talking through the first mover advantage. But one attendee asked, does having been in phase 1 give some kind of preferential positioning for the company for those years heading out to sort of 2028, 2029? Why those years in particular? How will your applications, do you think, be positioned relative to other projects on the list that participated in phase 1?
I think, it's 29 and 30 is really sort of going to be the next sort of large load allocations. Again, that process is evolving. It should be out here in the next several weeks here, just from the system operator as well, for exactly how that's going to look. Will we be preferential or get any sort of preferential treatment? No, I mean, they can't treat us special, but I will say this, we do highlight again that we were the only party that actually applied for both load and generation as they'd requested. So we actually do have a strong conviction that our model is correct, and we think that how we've done this will become the standard. Should we be, given preferential treatment? It can't work that way in this type of a market. However, it does just sort of speak to the acumen I think the team has, given that we followed what they told us that they wanted, and that we think that's going to be held out as the model on how future capacity and load generation applications proceed.
Yeah, thanks, Matt. And perhaps just another question, thinking about timelines. This question also came in from the floor, but is it possible to give an approximate timeline on when you're hoping the AESO phase 2 consultation will be completed?
They're doing that right now. We're going through that. We've already provided an awful lot of our feedback thus far, and then they'll be coming out and socializing something. They said they were going to be doing it in October. I actually have a feeling it won't be until the first part of November. But when they do that, they'll come out with their own platform, as it were, and that will be open for stakeholder discussion. Perhaps some modifications, or maybe it'll be a slam dunk, but we'll have to see. But it's not too far away.
Nice one. Thanks, Ross. Perhaps lastly, just on the technical side, this was a written question prior to the webinar, but just mentioning the website states Kalina projects will be the 170 megawatt natural gas-fired combined cycle power plants incorporating CCS, carbon capture and sequestration. Are these the projects now being considered for AI and data center activity in Alberta?
Yeah, with the provision that I mentioned earlier in the presentation, where we were previously looking at carbon capture and sequestration, we had 200 megawatt combined cycle power plants with post-combustion carbon capture being designed. That would have netted after the parasitic load 170 megawatts. Right now, we're saying no. What we're going to do is we'll go out with either simple cycle or combined cycle power plants of about 200 megawatts. And we'll add carbon capture and sequestration in the future, depending on whether the client wishes to have it or not. I'll give you one example of what we're talking about here, just so we can make the point. Speed to market right now is everything. Speed to market is everything. So going back to the question you asked Matt a few minutes ago about the competitive advantage we have, well, if someone hasn't already applied for a new power plant application, they're behind us by a good year or two. Maybe 3 in some cases. So that's a huge competitive advantage right there. For us to be able to now say what we're going to do is we're going to go with simple cycle or even combined cycle, we're still going to be a lot faster to do that than if we installed a project that was going to also include carbon capture. So time to market is very, very important. It's way more important than we ever thought. So that's why we're doing it that way. So our projects, we should be thinking about them, each of them initially going to be 200 megawatts, whether it's in simple cycle or combined cycle with carbon capture. They're all going to be designed to incorporate carbon capture in the future, depending on whether the customer wants it or not. I will say this, that in the recent announcement with Greenlight, there was discussion and commentary in some of the reporters, investigative reporters that had done the story, talking about how the hyperscaler is keen to have carbon capture and sequestration in the future. And when we're talking to Crusoe is keen to have carbon capture and sequestration in the future. So everyone's interested in the future as long as it doesn't get in the way of the rapid deployment that they need right away.
Yeah, thanks, Ross. Really interesting context. Perhaps a few commercial questions, obviously, just on looking ahead for project delivery. One question might have been touched on in the presentation, but just confirming, has the company received the 17 million Canadian dollar payment yet in connection with the recent announcement?
No, because they sent it to us in a currency that was not to our liking, so we had to send it back. No, I'm just teasing. No, we haven't got it yet, but Tim said it perfectly earlier on. The payment is going to be paid imminently.
Yeah, well noted. And also touched on the agreement with Crusoe a couple of times in that presentation, but there's a couple of questions here from the floor. Yeah, just looking for a general update on that agreement, how it's moving forward. Obviously, Matt referred to Crusoe amid sort of multiple discussions that are underway, but is there any sort of brief high-level context that we can add on that previously reported announcement at the moment?
What we're trying to do there is we are really trying to flesh them out. And as I mentioned earlier in the call that we had with them going back 6 weeks or so ago, we asked them very directly, with all the activity you're doing, think of it. When we did our MOU with them in August of 2024, they had just broken ground at that time on the world's largest data center company, that largest data center project at 200 megawatts, which by it now is 1.4 gigawatts. And they just announced a 1.8 gigawatt project in Wyoming that's going to grow to 10 gigawatts. So you can imagine our conversation Matt and I had with them, which was to right out of the gate say, hey guys, congratulations. Where does that leave us? Are you still interested in doing something in Alberta? Because we were prepared for them to say, no, we can't, or no, we're not, or maybe we're too small. We don't know. But they assured us, no, they are still very keen on doing something in Alberta. And they were surprised to hear about the advent of this new project going forward with a hyperscaler. They didn't know about that. They were surprised. So the key for them has been whether or not they have clients or tenants that are interested in coming to Alberta. Well, as Matt walked you through it, right now they're very surprised. And I think they're going to even be more surprised when the second announcement comes through around the other hyperscaler that's also very active right now with another major player. So I think this is going to be a big game changer for us. And right now they've indicated that they're working there as they can. They've apologized the fact that they've been extremely busy with everything that they're doing, and that time has not been beneficial to us, obviously, and we've been disappointed. They've apologized for that, but they seem to indicate that they want to continue to be involved, and we're going to make the best of that. But at the same time, we made it very clear to them that we have an obligation and we are actively engaged with other data center companies. The best world for us would be getting a couple of projects done or multiple projects done with Crusoe. That's what would be the best thing for us. At the same time as being able to do other commercial transactions with other data center companies. And that's what we're striving to do.
Yeah, and I'd just like to reinforce that point on the competition as well that's happened. Again, this is very, very recent as well. There's going to be big competition here, we believe, with the hyperscalers. And I'd just direct whoever asked the question as well. There's very publicly one of the executives of OpenAI was recently meeting with federal ministers in Canada saying they wish to expand their data center footprint and hyperscale build out in Canada as well.
Yeah, thanks.
Matt,
Sorry,
Matt, make that connection if you don't mind. OpenAI with Operation Stargate and etc.
The key tenants of Crusoe's project in Stargate are Oracle, OpenAI, and Microsoft.
Yeah.
Nice one. Yeah, really interesting overview there of the demand landscape. I think we're just coming up to the hour mark now, so might wrap it up with a couple of questions here. But another question on the commercial side was in connection with site sales. Is that still a priority? What stage are potential site sales at, and would there be any significant obstacles in your view potentially preventing a site sale?
Nothing to prevent it, but everything in the world to suggest that two things have changed markedly, right? There's a lot more interest right now coming into Alberta than we've ever seen with respect to data centers. So there's more interest on all of our sites. But also it improves our position from having to, as Tim, I think, outlined earlier in the conversation, we're not in a situation where we're desperate to have to get a transaction done. It puts us in a much stronger position to be able to negotiate, I think, a rational and reasonable approach in terms of getting an accretive deal done.
Yeah, well noted. Thanks, Ross. Perhaps just to round it out, because this question sort of reflects a few different questions. There's an amalgamation of a few that have come in just on the work that you're doing with your investment banking partners. I think Matt did reference it in some detail during the presentation, but is there a broad update on financing, that anything we can add in terms of the work with PEI Global Partners in New York and Moneta Securities? What kind of timelines they're looking at potentially to help with deals? And yeah, just a sort of high level overview of how you're working with your banking partners in the current market.
Hey, Matt, why don't you take a handle of that and I'll augment that as needed.
Yeah, absolutely. I don't want to put an exact timeline because obviously in my prior career, I ran process like this all the time. Where we are right now is we're having management presentations, and we've got many more. So we're right in the thick of that process. What leads out of this process will be, the follow-up discussions, and if anybody, and then we'll get to term sheets, and we'll start talking investment terms. Right, the length of that time. Certainly, we'd like to be as short as possible, but these are extremely busy counterparties we're dealing with. We are speaking with all the way up to including the largest infrastructure funds in the world. We're doing our best to answer the volume of questions we've been receiving, and the process could take some time. We also want to be able to find the right partner through this as well. All we can say is that there's strong interest in this process. Our advisors are continually finding more. They're having high levels of engagement, and we're going to work through this. And this is a priority for us right now, more so than anything else as we've moved through the sale of these megawatts. No.
Yeah, I don't have anything to add. That's perfect.
Yep, well articulated. Thank you to Matt. Look, I think we'll wrap it up. There was certainly a comprehensive overview of where Kalina's at and those trends in the broader sector. So we might conclude now, but thank you obviously to Ross, Matt and Tim for the presentation and taking time to answer questions. Thanks also to our attendees. Plenty of interest from the floor there. Had a lot of questions come through. I think there's obviously a lot of interest in this sector and in what the company's doing. So apologies to those attendees if we didn't manage to get to your question. But as mentioned earlier, a recording of this webinar will be available on Kalina's website and media platforms later today. Ross, Matt, Tim, just before we go, any final comments you'd like to add?
I'd just like to make sure that we've conveyed just how excited we all are and just how transformational this really is. It really validates and vindicates everything that we've been doing, all of our planning, all of our strategies. Basically, when you have the ASO telling everybody else, do what Kalina's done, because of that's the only way you're going to be able to get power in the province. That's pretty exciting for us. And this is just an absolutely transformational time for us.
Yeah, fantastic. Well concluded there, Ross. Look, thanks again. Thanks to our presenters, attendees. That concludes today's webinar. We'll see you next time.